Hi friends, welcome to the channel. This is your Govindraj. Thank you very much for watching my previous videos and also sharing it to your contacts. In the previous video, we talked about these compulsory gratuity rules of Karnataka, which were brought in the month of 2024 January. And of course, we have talked about how it is employee friendly, how it is going to ensure the gratuity for employees even in the case of bankruptcy and closing down of the establishment. All those things we have talked about it. These rules have come into picture in the state of Karnataka effective from 10th January 2024. So these are going to have a lot of impacts on employers. Therefore, one side it benefits the employees, and the other side it also has got certain challenges for the employer, certain implications for the employers. So therefore our job is to see both the sides of it. Now we have to see also what kind of challenges employers are going to have, all those things. Now in this video, let me deal with the challenges for the employers. The first one is the application crisis. Are the employers normally which are the establishment are going to get covered under these rules? See, the statute is the central statute, which is Payment of Gratuity Act 1972. Of course, under that there are rules made by the central government and rules made by the state government. Now there are certain establishment the central rules are going to be applicable, and for certain rules state government is going to be applicable. That is based on the application of the rules. See, these rules are not applicable to establishment wherever the central government is having the control, and wherever central government does not have the control, the state government is going to have an impact on that. So therefore we have to look at appropriate government definition, because when you look at section 4a, which was brought in the 1987, the power to enforce these rules or the provision which is under section 4a of payment of gratuity is left to the appropriate government. So therefore state as an appropriate government has brought rules for application of in the state of Karnataka. So therefore, if you look at the appropriate government definition, all the establishment which are belonging to or under the control of the central government, even establishment which have branches more than one state, and a factory, an establishment of a factory belonging to or under the control of the central government, or of a major port, mine, oil field or railway company, then for these kind of establishment the central rules are applicable. So therefore the compulsory gratuity rules of Karnataka 2024, if these kind of establishments are still there in Karnataka, they are not applicable. And one clarity which I have to give you is the factory, even if it's not a central government factory or within this definition, if the factory has got branches in more than one state, for the factory which is situated in the state of Karnataka, the still the provisions of Karnataka rules are applicable, because factory and establishment are held to be differently in the appropriate government definition, which there are certain cases are also available on this topic. So this is the first crisis which employers definitely will have the clarification for them to ask. The second one which is coming up for in the minds of the employers is the funding liability. Now so far what is to happen is the employer used to give the gratuity from their running accounts or the running income or whatever their expenditure account. Now the law is mandating for them to calculate the liability and catch hold of the insurance, then pay the insurance premium and take every year this insurance policy by paying the insurance premium. Now this liability, when they calculate based on the current employees, the insurer is going to calculate depending on the past service gratuity. Now when they calculate for an establishment which already has got 5 to 10 years or 15 years of history, the liability will be very huge. Now how the employer will be able to fund this amount at one given point of time is very important. Conventionally what used to happen is, whenever the employer goes for forming a trust and funding of gratuity, he gradually funds his liability, so that at a given point of time then he will have certain assured amount, so that gratuity can be covered from this fund. Now because of this insurance rules, the employer is required to calculate the liability and then fund it at once. See, this is the interpretation which is if you look at the rules provisions or the objective of the scheme, then this is definitely the understanding of the provisions. So therefore, this is the understanding will come to you where if you look at the objective of the rules, then you are required to calculate and fund it at once and take the insurance. But if you look at the rules, if you say Rule 3.1 says establishment shall obtain valid insurance policy in the manner as prescribed under section 4 of section 4A of the Act. But if you look at section 4A1, subsection 1 of section 4A, it says obtain an insurance in the manner prescribed and not more than this. So therefore, even in the central rules, it does not talk about the compulsory gratuity insurance or the liability coverage or manner of obtaining an insurance. So therefore, in the case of insurance, mandating the employer to take the full or cover the full liability may not be in the good sense and applicability of the provisions. But if you look at in the case of approved gratuity fund, Rule 6 already clarifies that the total liability has to be covered. But in the case of insurance, with or without the trust, not the approved gratuity trust, then in that cases the full liability coverage or full funding of the liability should not be mandated, so in my view. But if you look at the objective of the rules is to secure the gratuity, so therefore the labor authorities are definitely going to interpret that you have to cover the full liability. So this is the explanation for full coverage of the or full funding of full liability. Now the next question is it okay only to take the insurance, or do we require to form the trust, or is it possible without the trust or without the approval of the income tax? See, answer for this question is there are three ways of obtaining an insurance. First one is only insurance, take only the insurance and pay the insurance regular premium. For the sake of these rules, this is sufficient. You don't have to do it. You don't have to do anything else. Now the second one is you can have unapproved trust, and from the trust you can take the insurance. This is also the proper compliance. Then the third way is obtain an insurance with the approved trust from the income tax authorities. All these three modalities are possible. But when the employer is going to take the income tax benefit, the income tax benefit for the whatever the amount is going to be paid for the insurance company, so that is only possible in the case of approved gratuity fund trust. If you make an approved gratuity fund, only in that case it is possible. So I have given you an answer for the third complexity or the challenges which the employer has got. Now the fourth one which is coming to mind to my mind is how to ensure in the case of contract labor. Of course, this is a much debated matter where the laws are not very clear. If you look at the current judicial trend, the liability is on the contractor mainly and not on the principal employer. Of course, there is a duality in the judicial trend. So therefore, you have to see what is the applicable law in your state and then interpret it. Now, when you cover the gratuity liability or take the insurance, is it required to take for all employees or those who have completed 5 years is also one of the challenges which you will, I know definitely it will come to your mind. Answer for this is, see, it doesn't matter whether somebody is covered when somebody is completed 5 years or not. See, the importantly is you have to consider all the employees and the role of the company on the day of taking the insurance, because eligible employees means all employees under the gratuity provisions. If you take, even in case of death or disability, the 5 years conditions of service or 5 years continuous service does not matter. So therefore, you have to consider while calculating the liability, all the employees you have to consider. So this is the fifth challenge and the answer which I have given you. Now the sixth one is, if you have approved gratuity fund already, the provision or the arrangement, you can continue to have it. But the important compliance which is coming under this is you have to register that approved gratuity fund under Indian Trust Act. So this is made compulsory. Now when you are forming the trust rules or trust deed for registration under Indian Trust Act, you have to be careful, because once the employer once the employer discharges his liability at the end of the company, so then the residue amount should go back to the original employer. So in the trust deed, you have to ensure that. So therefore, be careful when you are forming the deed or when you are framing the deed and registering it under Indian Trust Act. Now the seventh one is, these rules do not provide any exemption or relaxation for the small employers. It doesn't matter whether you are a small or a big. If the act is covered means, then you are required to take the insurance compulsorily. So therefore, you have to be very careful. And now it comes to the timelines for implementation are very short. Now as of now, the timelines are over, because for the existing employees the time was given 60 days, and for the new employers which are going to come up, for them it is 30 days. So these are very short timelines. Now in addition to that, the ninth point is, there are new compliances have come, because you have to register your establishment with the controlling authority after taking the insurance, and you have to also continuously supply the information about renewal and all those things to the controlling authority. So these are the challenges which the employer is going to have because of the new rules which have come. So therefore you have to read it carefully and then comply it. So thank you very much friends for watching my videos. I will see you in the next video with new information. Until then, let me sign off friends, and thank you very much for watching my videos.